Guys, I'm going to show you how to analyze and evaluate a real life example. This is a triplex located in a highly desirable suburb of Cleveland for young kids who are just out of college getting ready to get out there. So let's take a look at this. This property, located at 12521 Plover Street in Lakewood, was built in 1899. But guys, great curb appeal here. Look at this house. Newly remodeled. Look at that. Beautiful painted brick. Now, obviously, there's multiple ways to buy property. I'm looking at a deal here that's already been renovated. Let's go take a look at some extra pictures for the property. This has 3 units in it. 2 2-bedroom units on the bottom floor and 1 1-bedroom unit on the top floor. Great flooring. Does not look like it was built in 1899. Great renovation job, whoever did this. This is very clean, very easy. Now, obviously, I'm looking at it on the internet, not in person. But this is looking nice. Right here off the street, there's a driveway right here, which shows me there's probably going to be some parking here. A total of 5 beds, 3 bath, 2,300 total square feet. Now, here's what I love. Thank you, real estate agents. Amazing opportunity to own this investment property with positive cash flow. Don't ever listen to an agent when they say this. How do they know it's positive cash flow? They're just making assumptions here. Situated in a prime location near restaurants, parks, and all the amenities Lakewood has to offer, this renovated triplex is a gem. Guys, what makes it a gem is getting a really good return on your money. Yes, it's nice to see a nice property, but I want to make sure you focus on getting a good return on your money. That's why we have our real estate calculator to help us with that. So let's start inputting it into our real estate calculator. I'm going to go to our tools, real estate calculator, create a deal. All right, first one, Lakewood triplex. Address, let me go back and get it here. I'm going to input it as 12521 Plover Street. Okay, go to next. Number of units, 3 units. Now, this is where you input your appreciation rate. What will the property's income, expenses, and property value increase by per year? Guys, depending on the market you're in, depending on where the property is in, et cetera, this can range from inflation all the way to 5-6%, depending on what your input is on it. If you look at history, houses around the country, no matter what market it is, grows with what income grows at, right? Because think about it this way. If income grows 5% in a year, every year for 20 years, the rents are probably going to grow 5% a year as well. So income per capita has grown at about 4.5% a year for history. So I'm going to go in here and put appreciation rate of 3.5 or 4%. Let's start with 3.5%. Now, vacancy. Guys, you have to have a vacancy. Yes, it's only 3 units, and if you have 1 vacant, it sounds like 33%, but it's not. The vacancy factor here is usually going to be between 5 and 10% because hopefully it's a new property, you'll release it pretty fast, and hopefully people will stay a little bit longer. So I'm going to put 10% vacancy in here, which means you're going to have about 1 unrentable month per year. That's about what it is. It's a little bit more than that, but that's about what it is. Now, purchase price. They're asking $319,900. We're going to put that in for right now. In the future, when you sell it, how much does it cost to sell? Let's call it 7% with a broker, and I'm going to do a 20-year analysis. Now, cap rate upon sale. I'm not going to worry about that right now. I'm going to put it in here. I don't want to confuse you too much about that because that's a little bit more thorough, but I'm going to basically match it where the property value day one is equivalent here. So just don't worry about that right now. The main goal here is to understand how we generally underwrite the property. Acquisition fee, financing fee, you're probably going to pay about 1% for financing. And I'm going to put here at the right, we're going to refinance. Because guys, one of the joys of investing is you get to refinance every so often. And when you refinance, you get to suck equity out, tax-free, and go buy more properties. So I'm going to click this tab here for will refinance. Next, let's go to income. First off, there are 2 2-bedroom, 1-bath units, and they're roughly, it looks like about 800 square feet each. Now, what's the current rent? So the one thing they don't do here, they don't tell me rents here. And that kind of stinks. First thing I'd ask the property, the real estate agent is, what are the rents they're charging right now? Because you have to know these rents. Oh, by the way, let's look at this. This property was asking $350 back on April 4th. It's already down to $319,900. But I don't see anything about rents. Now here's what we can do. Now, I found on Zillow, the previous listing here, look at these terrible pictures. Look how well they did with this renovation. This is the former front. This is the inside. Look at this. They did a great job renovating. kudos to them. They did a great job making this look a lot better. And the rent estimate right here, according to Zillow, is $1,050. Okay, now I don't know if that's factoring in these crappy ones versus regular ones. So I'm going to sit here and I'm going to put in a rent estimate of $1,100. And then the one bedroom upstairs, one bath, roughly 600 square feet, I'm going to put in $950. All right. Now, below you can put miscellaneous income. I don't know what's the landlord charging, who's paying utilities, etc. I'm going to assume the tenant pays all the utilities right now. So guys, what are we going to rent this for? I have the current rents here, but I don't know that area very well. So what I'm going to do actually is I'm going to go to Zillow and I'm going to go find the street and I'm going to look at for rent in this area, apply. And I'm just going to start looking. So this is $1,700 for a 5-bedroom. Okay, a little too big. Well, but that's multiple units. 2-bedroom, 2-bath. So I have to find the ones that are actually rentables. So $1,300 a month. This is a 1-bedroom, 1-bath, 540 square feet for $1,250. Guys, our unit's bigger. Okay, this is a well-done unit. Probably nice, but it tells me that this one's probably nicer. Wow, 540 square feet. It looks, wow, interesting. Okay. Let's see this one for $1,300 for another 1-bedroom, 800 square feet. So this is bigger. This is nice. But as you guys can tell, like you got to be able to look in the area. This is a 1-bedroom for $850. Remember another thing, guys, a lot of landlords get things the wrong price. They just want to keep their unit full. They don't charge the right rent. I think for the 1-bedroom, $1,000 a month is probably pretty reasonable for that property. So for a 2-bedroom, I would say $1,250. Okay, because their first unit, their lower level, $1,250. All right. So next thing is, let's go to expenses. Now, understanding what the expenses are, property taxes. Property taxes in Ohio are going to be a percentage of the price paid. Okay. Now we can find that out with Lakewood. Right now, the tax assessed value is $107,000 and the annual tax amount is $2,900. So it's roughly 2.75%. Okay. So I'm going to go into our real estate calculator and I'm going to type in 2.75%. Now management fee. Now guys, this is where it gets a little, it already started, the second item gets a little interesting. What's the management fee? Are you managing this yourself? Are you going to have somebody else? A lot of people want to manage themselves are not going to put a management fee in here. Understandable. My goal, we're teaching people to buy one property per year is that you self-manage. If you want to put I still think it's smart to put a management fee in here. But if you don't put it, I understand. I get that. But your time is worth something. Normally, if you want to go hire a property management company to manage this, they're going to charge 8 to 10% because it's a small property. Let's put in 4% here for you to manage it yourself. Leasing commission, you're not going to charge a leasing commission. You're going to lease it yourself. Insurance. My guess is this is going to be roughly $750 per unit per year. So I'm putting in $2,150. Maintenance staff. Hopefully you're doing the maintenance. But you still want to allocate some sort of money to that. Let's put in a total maintenance or repair number for all 3 units of $650 per unit. Capital expenditures, $400 per unit. Now, maintenance repair is things like leaky faucets, putting in some turnover, painting it when people move out, doing some touch-ups. CapEx is the big stuff. A furnace goes out, the roof goes out, things like that. $400 per unit per year. So $1,200. What you end up happening is every 4 or 5 years, you're going to have a bigger expense, and that allocates for that. Okay. Advertising, guys, Zillow's free. Craigslist is free. You can put a sign in the yard. You're not going to advertise this in some paid advertising thing. Accounting and legal, don't put that in there. Landscaping. It actually doesn't look like they had any landscaping here, guys. Not going to lie. I don't even know whose property that is to the right of it. Is that theirs? I don't know. But let's put in $25 per cut times 30 cuts a year, $750. Snow plowing, they have a driveway. Let's call it 10 pushes per year at $55, $60. Let's call it $750 right there. Now, gas, electric, water, sewer. Again, who's paying that? Probably the tenant. So even if if we're not charging the tenant for it, either they pay for it or they don't pay for it, you charge them for it. All equates itself out. It's all zero. Now, so far we have expenses per unit, $5,600 per unit. Okay, not bad. Seems about where it should be. And again, Could you make this management fee zero? You're doing it yourself, etc. If you're going to do all the labor yourself, things like that. But at some point, I want you to at least pay yourself for that time because it really is a cost for you, okay? Next, let's go to the mortgage. Typically in a property like this, you have to put 25% down, and let's say the current interest rate is 7%. I don't know the exact interest rate, and they're going to do a 25-year amortization. That's going to make your mortgage payment $1,695 per month, all right? But remember I said, we're going to do a refinance. We go to next. Refinance at the end of year 7, 1% fee, 75%, 7% again, 25-year amortization. Year 14, 1% fee, 75% LTV, 25-year amortization. Now, guys, I keep these rates the same as what I'm paying now. They could be higher, they could be lower. I have no idea. But if they go higher, my guess is rents will also go higher, so the value will all equate itself out. So we've put in revenue, expenses, mortgage, refinance, our general information. Now I'm going to finalize my deal. So here's our recap report. We have our revenue, our expenses, our net income, a value of the property based on that cap rate we put before, mortgage payment, cash flow. Good news, cash flow is from day one, but the cash flow is not huge. Remember, guys, only real estate is about building wealth long-term. You get a little bit of cash flow, you pay down a mortgage, and you get appreciation. And you wake up 10, 15, 20 years down the road, and you're like, holy cow, this property is worth a lot more than I paid for it. I've paid down debt. My bank account has a few bucks in it. That's the key to real estate. It takes that patience. But trust me when I say, it's so incredibly worth it. So what's the IRR on this deal based on these assumptions and paying full ask price? Over a 20-year period with a refinance every 7 years, wow, not bad. 14.5%. I always tell people, you shouldn't be doing any real estate deals unless you're going to make between 13 and 16%. That falls pretty much right in the middle. Now, what were the assumptions here we made? Well, we made assumptions on the rents. That's the biggest one. You got to verify those assumptions are correct. Because right here, I'm looking at this going, I could probably get a deal done pretty close. In fact, if I can get 300, let's see what the value becomes at 300,000 as a purchase price. 17.5% return. So really the price is around 310 or so, where I'd be like, okay, let's go do this deal based on these assumptions. But if the rents are too high that we assumed, it's gonna be a lot lower number. If the rents are too low that we assumed, I think this sounds like a pretty solid deal. So guys, if you wanna learn more about real estate, subscribe to the channel and watch our next video, our step-by-step guide on how to invest in real estate deals. Thank you for your time.